Today's top picks from Reuters Breakingviews: why European banks should disclose their ECB earnings boost, and the prestige and power behind Qatar's frantic shopping spree. With me is Peter Larsen. Let's start with the banks and the LTRO and the boost they've received from it. Well, either they've made money from this, right, or they're going to start giving it back. And we're going to find out pretty soon which bank has got what and done what, right?
Well, we may not find out, actually. I mean, we know roughly which banks have taken what from the LTRO, but what we don't know necessarily is how much of this is going to add to their earnings. Because if you think about it, if you took 10 billion, borrowed 10 billion in the LTRO at 1%, and plugged it into Italian debt yielding 5%, you're getting quite a healthy boost to your income from that investment. The problem for investors is that actually the weakest banks took the most at the LTRO, and the strongest banks took the least, and are now making noises about paying it back when they can at the end of 12 months. So for investors, you're going to have this weird sort of dichotomy where the strongest banks, on the face of it, will be less profitable than the weakest banks. And so what we're saying is, really, if you're an investor in these banks and you want to try and work out who's strong and who's weak, you really want to be able to separate out the LTRO
you need
boost.
to know, right? Yeah. Should it not be part of the deal with the ECB that a requirement, if you like, that the banks are transparent about what they've done with the money, whether they've made money from investments related to that money, etc., etc.? I don't know. Was that asking way too much?
I mean, I think the words ECB and transparency don't necessarily live together terribly well. I think, look, the strategy here is to say, let's give the banks a boost, let's allow them to make some money and let them rebuild their capital, and then hopefully give them some time to
tell us how they've made that money.
And they don't have to tell us how they've made that money.
That seems a little odd.
I think there's a broader point here. I mean, there's a point for the investors, which is it's hard to work out what's going on and who's getting a sort of a 3-year adrenaline fix and who's actually sort of doing okay. But also from the health of the broader sector, as far as the health of the broader sector is concerned, if you want ultimately to get the health sector back to health, and you want it to be recapitalized, and you want private investors to put their money into this sector, they need to be able to sort out which are the healthy banks and which are the unhealthy ones. And the danger is that if you don't disclose this and you allow banks not to disclose this, that they will basically tar everybody with the same brush and say, we're not going to touch them.
It seems a dangerous way to let this happen. Anyway, we will find out soon enough, I guess.
Yeah.
The Gulf state of Qatar is on this shopping spree. I just want to read out some of the companies in which it has stakes, and it's quite an impressive list: Lagardère, Total, Horti, VW, Porsche, Iberdrola, Barclays, Credit Suisse. Of course, it owns Harrods as well. Yeah. Is there a strategy to this?
Well, that's what we've been trying to work out, and it's quite hard to see a strategy here. I mean, part of it is, and there is some concern that this is another Dubai situation. Yeah. They're sort of going on a bit of a spending spree. I mean, there are two big differences. First of all, this is at the bottom of the cycle, Dubai bought at the top. Secondly, Qatar is spending actual cash that it has. It's not borrowing, really.
Right.
And this is a country that is projected to have revenue from oil this year of $100 billion and a current account surplus of $54 billion. So there's a lot of money sloshing around there, right? And the strategy for Qatar clearly is to try and diversify this wealth as much as possible and ensure that when the oil runs out, there's some money left over to actually kind of have an economy at the end of it. Now, once you say all that, though, kind of what are they actually? They're basically buying stakes in big Western companies. Kind of, are they getting influence? Not really. The occasional, they're trying to look for a board seat and stuff.
And it seems pretty across the board as well. These places.
And it's pretty across the board.
Sort of an automotive trend or a retail trend.
No, no, absolutely not. But I think the strategy very simply is looking for value and looking for diversification. And looking for companies in the West that they know are going to be around for some time.
Like any low-risk fund manager should be.
I think that's right. Yeah. Right. It's just that they have so much money, they're now getting to the point where those stakes are becoming visible.
All right, Peter, many thanks for that. Peter Larsen. For more agenda-setting insight, watch our US Breakingviews show every day, 12:30 Eastern, 17:30 GMT. You can find it on the Reuters.com site, the Breakingviews site as well. I'm Axel Threlfall. This is Reuters.